Money Talks.
Money Talks.
Money Talks. Money Talks.
Money Talks with CFA Society Nigeria. Let's talk about money.
Hello everyone and welcome to Money Talks. Money Talks is brought to you by CFA Society Nigeria and it's a financial literacy program. Smart Uzechi is my name. You can call me Captain Smart and you will be financially correct. Today on the program, my guest is Kaliba Bilala. Kaliba Bilala is a monetary policy enthusiast who spends his time assessing its impact on finance and investment. He worked with Coronation Merchant Bank Limited in the investment banking group. Prior to this, he was a pioneer staff of the Asset Management Corporation of Nigeria, AMCON, where he had a first-hand view of the unintended consequences of excess liquidity on finance and investment in Nigeria. And together with Kaliba, we'll be talking about the role of the central bank in influencing the value of your investment. Before we get into the topic, let's say welcome to Kaliba. Kaliba, good evening to you and welcome to Money Talks.
Thank you, Captain Smart. Thank you for the invitation.
It's so good to have you. How are you doing?
I'm very well. Thank you.
And I hope work is going on well.
Yes, it is.
All right, for the listening public out there, you can always participate on the program by calling us on the telephone 0707 218 6998. That's the number to call, 0707 218 6998. You can also call us on 0700 923 923 923. That's 0700 923 923 923. Or you can send us a message on WhatsApp 0817 313 6193. That's 0817 313 6193. Or continue the conversation online www.cfasocietyng.org. Stay tuned. When we return from this very short break, Kaliba Bilala and I will be delving straight into the topic. Please do join us again.
Money Talks with CFA Society Nigeria. Let's talk about money.
Welcome back to Money Talks, a financial literacy program brought to you by CFA Society Nigeria. Captain Smart is my name. Kaliba Bilala is my guest. And this evening, we're talking about the role of the central bank in influencing the value of your investment. So, Kaliba, one more time, it's good to have you on the program.
Thank you once again.
So, let's begin. In simple terms, Kaliba, what does a central bank do? In layman's language, they can say this central bank self waiting with their work. What does the central bank do, and why should the average investor really care about the CBN, as we call them here in Nigeria?
Thank you for that question. So basically, a central bank is a public institution that controls the supply of money in an environment or a group of countries. And when I use group of countries, I'm relating to something like the European Central Bank that oversees a region. And in determining or controlling the supply of money, they're usually given two mandates by the legislature of any country, and it borders on controlling inflation, basically just ensuring that prices do not spiral out of control, and full employment, basically sustainable economic growth. Now, for Nigeria, we have additional mandates given to the central bank, which requires it to manage our exchange rate by virtue of keeping foreign reserves and also acting as a banker to the federal government. So, for the typical investor, basically, you are interested in where you put your money and how that influences it. And based on what I just told you about the central bank, we're talking about interest rates, we're talking about inflation, we're talking about economic growth. These are macroeconomic variables that determine how investors, or should influence how investors allocate their funds in the economy.
Interesting. you're just taking me back to my O-level economics where we're learning about the central bank and all of that. And in Nigeria today, every month, or I think quarterly, people
bi-monthly,
people look forward to the MPC meetings that the central bank will hold. They're looking at what's the MPR and all of that. So the central bank, one of its roles or functions is to determine these interest rates through its MPC meetings bi-monthly. So how do they really influence interest rates, and why is this important for everyday investors?
So thanks for taking us back to school. And some of us barely survived economics in secondary school. So if you do remember from your demand and supply graphs, there's something called price that sort of equates demand with supply. In terms of money, it is actually interest rates that equate the demand and supply. So when they control the interest, when they set out to control this interest rate, all they do is influence the demand and supply of money within the country. And I am sure you are very familiar with something called the open market operations.
Yeah,
that is an active operation that is actually undertaken by the central bank to, depending on its actions, whether to mop up liquidity, that is take money out by bidding funds from those banks, or pushing money into the system by letting the other people know. Now, what other part that people don't necessarily pay attention to is a passive operation that is called the standing facility window. Now, that is actually at the discretion of the bank. So the bank can approach the central bank to say, I have this excess funds that I want to deposit with you overnight, which is what we call the standing deposit facility, or to borrow from the CBN overnight standing lending facility. So basically that's how it just moves the money around the banking system.
In case you just joined us now, it is Money Talks. Money Talks is an initiative of CFA Society Nigeria, a financial literacy program. Kaliba Bilala, it is my guest on the program this evening, and we're discussing the role of the central bank in influencing the value of your investment. If you want to be part of the conversation this evening, as I think you should, you can call us on the telephone 0707 218 6998. You can also call us on 0700 923 923 923, or you can send a message on WhatsApp 0817 313 6193. To learn more about CFA Society Nigeria, you can head over to the website www.cfasocietyn.org. While the calls and messages are coming in, I see some of them here. Kaliba, I'd like to ask you, so what happens to investments like fixed deposits, treasury bills, or bonds when interest rates rise or fall? Because bi-monthly we're waiting, is it going to rise, is it going to fall, or are they going to just maintain it the way it is?
Yeah, so thanks for that. It's important to sort of separate what you just said now into two buckets. So I will put the treasury bills and
the fixed deposit
in the short-term bucket, and then I'll put the bonds in the long-term bucket. Also, as an investor, it would be nice to know whether you plan to hold these instruments to maturity or you plan to sell them. And I say that because there's this thing in the market that says, there's a standard maxim in finance that price of those instruments move in opposite direction with interest rates. But that's why I had to just clarify that for the fixed income, for the short-term instruments, there isn't that much of a difference in that because it's a discounted instrument. So basically what they tell you they are paying you is what you will get upon maturity. But that is not so for the long end of the instrument. For that, let's say we're using a standard semi-annual coupon bond. Basically you get paid interest twice in a year. The theoretical assumption there is that when you get that cash flow, you go back into the market to reinvest that at the rate. So basically we know that as time moves over, as time progresses in the future, interest rates change. So that impact actually can change. So it's, let's say, that's where you need to be clear about which of the instruments you're talking about or what you plan to do.
All right. 0700-923-923. That's the number. You can call us now. Phone lines are open. Or 0700-923-923-923. Remember, messages or voice notes can be sent to 0817-313-6193. Let's take some messages here. Good evening, Captain Smart and your guest. Please, I bought shares with AP over 29 years. I went to collect my dividend warrant and I was told that Central Bank of Nigeria said after 12 years I should be returned to AP. It's an order by the CBN. Please clarify. And that's Becky that sent in the message. Thank you, Becky. Kaliba will answer. The second one here says, good afternoon, Captain Smart and your guest in the studio. I've been seriously worried by this critical subject under discourse. Here are my questions. How does the Central Bank of Nigeria's interest rate policies affect returns and risk profile of my investment in the Nigerian financial market? In what ways does the Central Bank of Nigeria's foreign exchange policy impact the value of my Naira-based investment, especially if I plan to repatriate funds or convert to foreign currency? Number 3, how does the CBN's monetary policy stance influence inflation and overall economic stability, and what are the implications for the long-term growth potential of my investment portfolio in Nigeria? AA has sent you that message from Aso Drive in Abuja.
So which ones do you want me to answer first?
You can start from the first one. The person who bought shares, this is a question. They said that bought AP shares, and CBN said after 12 years they should go back to AP.
So for the shares, I will have to qualify my answer here. I know a while back the Securities and Exchange Commission actually had a database of all unclaimed dividends, and there is a law regarding what institutions should do. So I will beg this particular person to possibly reach out to a professional, just find out what the status is as of now, because I can see it's quite a long time. So I can't give a definitive response to this, but I do know that there was a database and I've actually seen my name on that thing.
All right. And the next ones?
So for the interest rate policies, recall that we were talking about how it moves the demand and supply of money that it controls. Not so CBN cannot control the CD. That's not a legal tender issues. But in Nigeria, it can control the naira, and what it does is that moving that influences the interest rate, and that interest rate, if this person recalls, is an input towards the cost of capital for valuing an investment. It is also a benchmark hurdle for determining whether you should invest in an instrument or otherwise. So that's basically what it does in a nutshell. And in terms of the foreign exchange policy, so foreign exchange policy, there is a simple way to look at it is that it's a spectrum. We're talking about moving from a fixed exchange rate policy, meaning that my naira should convert for this foreign currency at this rate, to the other extreme, which is floating exchange rate policy. Now, obviously, for you to be able to sustainably manage one of these policies, you need to have firepower behind you, and that firepower is the reserves, which is one of the activities of the central bank. They're supposed to maintain the reserves that will possibly safeguard the value of our naira. Over time, for anyone that has paid attention, that hasn't been what we had gotten, and because we maintained a fixed exchange rate about 360, maybe around 2020 or so, whilst we didn't have enough, and then whoever was in charge insisted that only a few people could get that. So moving to that, you can see why when the new management came in, they decided, hang on, we don't have this power anymore, we need to let the market determine. So if you say it's this, we will say that, but whatever happens, we will take the other side of the trade and just ensure that it doesn't get out of control. Basically, what I'm saying, what he just needs to know is that if you cannot let people come in and go out, especially for foreign portfolio investors that want some certain clarity to know that, okay, I can come in at this rate and I can exit at this rate, also knowing that you will not unduly penalize me with a domestic person, then you shouldn't have a problem. But of course, you know that with additional risk or with such restrictions, the value of investments might turn, maybe depending in naira terms, might be okay. But if you say you're going to convert it to a currency that we do not have control over, it might be lower, and that's what we had seen over time.
Yeah. So the local currency is having to find its footing by itself now.
Exactly.
So nobody's trying to hold anything down for you. You're not pegging anything. There's free entry and free exit.
There is some limited free entry and exit, but I mean it's orderly now. It's not like orderly. Before. And I believe the final question, more or less, same thing what we talked about. That was the first question you asked me about how the central bank has an impact on this. And like I said, for Nigeria, we have multiple mandates which covers interest rates, which covers inflation, exchange rate, and growth. And basically, if they do this so well, everyone is well off, not just one section of the public.
Okay, so can you tell us, Kaliba, how can ordinary investors, just a regular investor right there, respond when the CBN decides to change these monetary policies you're talking about?
So I would like to qualify my response when you say ordinary investors, because the idea is that there are lots of things to look out for, and when your net worth is below a certain value, you are actually encouraged to outsource the management of your investments to professionals, and that's where you have investment outlets like mutual funds. And those professional managers, by virtue of the aggregation or the power that they have from aggregating from different people, have the buying power to possibly invest at better terms than you can. So the idea is, please look out for investment managers that have funds that you trust, and those ones are actually professionals that know these things. So I can tell you, but I will be doing a great disservice if you're an investor.
Okay, you can join the conversation where you are. You can just call us on the telephone 0700 923 923 923, or you can call us on 0707 218 6998 if you're interested in investment and knowing how the central bank can influence that. You can call us, and Kaliba will provide some insight. Or if you want to send us a message on WhatsApp, I see that many of you prefer to use the WhatsApp portal this evening. You can send your messages, including voice notes, but keep them short. 0817 313 6193. That's 0817 313 6193. So Kaliba, when people take money to the banks, to the money deposit banks now, not the central bank, they want their money to grow. They invest money so they can get some kind of interest on those monies. But if interest rates go up, of course they're going to smile, but when these rates go down, they're going to lose their money. So how can someone actually protect their investments during the periods of high inflation or even currency depreciation like we've seen recently in our country?
Thank you for that question, and I do not think that if anyone from the central bank is listening to this, they will be too pleased with my response. The reality is that people respond to incentives, not to any patriotic zeal. So when the central bank takes its eye off of inflation, which is domestic price stability, then you find people looking for ways to ensure or to safeguard the value of their money. And whilst I can tell you that standard finance tells you to invest in inflation hedge instruments, which means that you should buy the equity securities of a commodity producer or someone that's exposed to commodity, or you can buy the commodity directly, or in some cases you buy maybe real estate because landlords can increase their rents willy-nilly. The truth is 2020 was one of those periods where lots of people ran into crypto assets because the central bank took its eye off the ball. It was focusing on focusing on financing the government and attracting FX as opposed to ensuring domestic price stability. So I know that there are people out there, ordinary investors like you and I, that possibly ran into crypto assets, and that period, I'm sure we still are ranking in among the top countries in that possibly purchase those assets. But yes, it's mainly expose yourself to securities that will protect you against inflation. But if the central bank does not do its job of ensuring domestic price stability, this is what happens. People run away from the naira to enter into maybe dollar or any other currency that will protect their value.
So how then can investors, particularly young ones, those who are first-time investors, how can they track some of these policies by the central bank, in order for them to make informed investment decisions? Because, as I said, nobody wants to put their money where they're going to lose them.
Exactly. And the central bank actually has a lot of materials on their website. The website has been revamped, and let me see if I can help one navigate there. So on that website, if you go to a section publications, there should be some materials called Understanding Monetary Policy Series. So it tells you what the central bank looks out for and how it executes its monetary policy. If that is a bit of a long stretch for you, I have written a bit of that in the past, a 6-part series online. But one of the things I will actually encourage people now, because like you said, the MPC happens bi-monthly, is that as much as possible, listen to what the central bank governor says, read the minutes. You may not necessarily want to read the voluminous minutes afterwards, but for practical purposes, let's just put it this way. So let's say, for instance, right now, the MPR, like you said, the monetary policy rate is at 27.5%. Let's say after a meeting, it has been increased to, say, maybe 28%, right? Basically, what they're saying is that they want to control short-term rates around this particular rate. But then again, attached to this, there's also something that they talk about. There's a corridor that you hear, say an asymmetric corridor or a symmetric corridor, plus or minus. I usually prefer to go minus or plus because that's the number line.
Yes.
So if it's here -1, that means that 26.5, which is what that is the standing deposit facility rate, meaning that banks can come deposit with the central bank at 26.5 or MPR -1. Of course, the idea is you buy high and you sell. You buy low and you sell high. So the plus is the rate at which banks can borrow. So currently it's about 5%. So that would be 32.5%. So basically, the central bank is saying that we want short-term rates that we think we can control to fall in between 26.5 to 32.5. And if the banks that we have direct access to, that we give monies to, that you go to borrow from, are borrowing from us at 32.5, then it tells you that if you are a borrower, you are going to borrow at a higher rate, of course, with additional risk. So the risk increases as you move from a corporate to an individual. So that's one simple way for young people out there to just.
All right, that's a lot of economics from Kaliba this evening. So Kaliba, let me see if we can wrap up with this one now. When, as you said, listen to the CBN governor after those bi-monthly MPC meetings, when they are reading, when the central bank comes up with those kind of decisions, people react to them. They make decisions based off of what the CBN governor has said. But can you walk us through, just in 1 minute and a half, the kind of mistakes that you think investors should avoid when they are reacting to such announcements, made bi-monthly by the CBN governor? Because after listening to all of that, people start to move their investments around. They try to either to increase them or to reduce them. So what red flags should they be looking to avoid?
So investors can actually overreact or underreact to the CBN decision. And one thing I need to point out is that in reality, the central bank actually tends to work with the market. So in developed economies, what you find is that they have already telegraphed their intentions to the market, because they have written rules, a framework that tells the market to anticipate this are the actions that we're doing. So let's say, for instance, now what you just said, maybe interest rate goes up. The typical thing will be to say, oh, hang on, my cost of capital will possibly go up, because that's an input that goes into that, and I look at a particular investment and I probably sell it. But then another person might say that, hang on, if I am actually exposed to the banking sector, that is actually a positive for me, because that positively moves with the earnings that they make. So what I am hoping that over time is that the central bank will move towards this particular situation, where, similar to what we see in the developed markets, where even in your sleep you can say what the ECB or the Federal Reserve is going to do. We also have that too, so that we don't have some of these surprises, negative or positive.
All right, that will be the size of the package. This evening, I have been talking here with Kaliba Bilala, and we've been discussing the role of the central bank in influencing the value of your investment. Kaliba, it's been such a wonderful insight you provided. Sounded like a master's degree economics teacher. This has been some lessons this evening. I will quite appreciate your time on the radio here on Money Talks. Thank you so much for coming.
Thank you, Captain Smart, for having me. And if you just remember from your O-level economics, demand and supply, you'll be fine.
Absolutely. The higher the price, the lower the demand, vice versa. They say that's on the demand side. But when you go to the supply side, everything inverses itself. Thank you so much. You can join us again next week at this same time on this program. Captain Smart is my name. Asking you to go ahead now and keep making finance a force for good. Have a good evening.
Money Talks.
Money Talks. Money Talks. Money Talks.
Money Talks with CFA Society Nigeria. Let's talk about money.